If you want to buy a home right now, should you be focused on interest rates or focused on your monthly payments? I say focus on your monthly payment because your monthly payment is the number that you will need to plug into your budget, not the interest rate. 10 years from now, you won't even remember what your interest rate was in 2023 when you took out the loan. The real question is, how can I lower my monthly payments right now? Here in the Boise, Idaho area, where I'm a realtor with John L. Scott Real Estate, a lot of people have been priced out of the market. Even a 1/4 of a point increase in rates will knock a lot of buyers out of the market because it pushes their monthly payment past their budgetary limit. So you do have to think about what the monthly payment is going to be at that particular rate. Now, many experts are hopeful that the Fed's rate increases will slow or stop as we move into fall and winter. But most potential home buyers still need some strategies for reducing their overall mortgage payments. So here I've got 7 ideas to help you lower your monthly mortgage payments. I think the third one's going to surprise you, as most people have no idea that this is even an option at all. Okay, number 1. Let's get 2 quick items out of the way right off the bat. That's your down payment and your credit score. The higher either or both of these are, the lower your monthly payments will be. The higher your down payment, the smaller the total loan. So make a firm commitment to save towards your down payment every month. Make it a priority even if you have to scrap some other thing out of your budget. And did you even realize that a higher credit score means a better lending rate? A lot of people don't know that. Lenders will lend out money at a lower interest rate to people who have better credit scores because those people have a better track record for paying back their loans. So work on improving your credit score. And if 2 people will be applying for the mortgage together, make sure they both keep their credit scores in good shape. Aim to be well above 740 if you can. Number 2, go loan shopping. That's right, not all lenders have the same rates for the same people. Shop for a loan just like you would shop for a car or a cell phone plan or your life insurance policy. Talk to at least 2 and preferably 3 lenders or even more to get the best idea of how you can lower your monthly mortgage payments. According to a recent study by LendingTree, the average borrower could save more than $80,000 over the life of a 30-year loan by shopping around. Different lenders have different standards for evaluating borrowers. And don't just look at the basic rates. Look at the terms, look at the additional fees involved. Try to get at least 1 quote from a mortgage banker, 1 from a credit union, and 1 from your own bank where you do business. You need to find the best lender for you in your situation. I know it's a pain to shop around, it's a little bit time consuming. But it's a pretty minor pain when you consider how much money you could save over the course of a 30-year loan. Number 3, and this surprises most people, and it certainly did me. Did you know you can negotiate with your lender? Try to get a reduction in the initial annual percentage rate or the refinance rate if you're refinancing. At least get a reduction in closing costs if nothing else. That will reduce the amount of out-of-pocket money that you'll need to bring to closing. According to LendingTree, borrowers have about an 80% success rate in these negotiations, and that's kind of amazing. And don't be afraid to tell a lender that you're shopping around, that you've gotten a better quote elsewhere, but don't stretch the truth. They will know if you do. Number 4, sometimes you can buy down the mortgage points. Now, what does that mean? It means you are literally paying the lender with cash at closing to give you a lower interest rate. This is usually done in 1/4 point increments, which may not sound like a lot, but it can make an appreciable difference in your monthly payments over the course of 30 years. But it does mean paying more upfront at closing. So make sure you understand the ramifications of a rate buy down. And beware, it can take time, like definitely years, to recoup what you paid in additional fees for the rate buy down. Ask your lender to calculate the break-even point. If you think you'll only be living in the home for a couple of years before you sell it, it may not make sense to try to buy down the rate. Here in Idaho, and probably elsewhere, it's not unusual to see home builders offer rate buydowns rather than purchase price reductions to new home buyers. So that's something to think about if you're considering a new build home. Builders would rather not lower their prices if they can help it. Number 5, ask for a discount on fees, especially if the lender is someone that you already have a relationship with, such as your bank or your credit union. These are called relationship discounts. They may not be very large, but hey, every little bit helps when making such a big purchase, right? Okay, number 6. Be sure to ask your lender what will happen if overall interest rates go down while you're under contract to purchase a home. Will they let you adjust your rate downwards, or are you stuck with the rate that you signed up with? Ask about this up front and get the answer in writing. Number 7, we're almost finished. Consider the lifespan of the mortgage. 30 years is standard, but you may find the rare 40-year mortgage. A 40-year loan will have lower monthly payments, but you will pay out a lot more over the life of the loan, a lot more interest. So make sure you take that into consideration. There are other loan types that may be helpful to you as well. VA loans if you're a veteran, absolutely. Adjustable rate mortgages or ARMs may work for some people. They're not a favorite of mine, but for a well-educated buyer who knows exactly what they're getting into, an ARM may make sense. Put simply, this type of mortgage offers a lower rate for the first few years of the loan and then bumps up to whatever the current rates are. Some buyers get a shock when, say, year 5 rolls around and their mortgage payments increase drastically. So make certain you understand the way an ARM works and what the implications are for your budget. Right now, you're going to hear a lot of real estate agents say, marry the house and date the rate. That may sound kind of confusing or even just downright weird, but think of it this way. If you find the house you want as your forever home, or at least your next 10 years home, and you don't want it to get away, buy it now if you possibly can, even if it means making some budgetary sacrifices at their current 7-year interest rates. But then, once interest rates fall, and keep in mind there's no actual guarantee that they will fall, you can then refinance your mortgage to a lower rate and lower payments. In other words, make a commitment to the home itself, but not a commitment to your original interest rate. Are you interested in Idaho and what it's like to live here? Well, check out this next video. And if this video was helpful to you, please give it a like or leave a comment. Thanks so much. Bye.